Hey guys, welcome to another video. Thanks for joining me in this one. So in this video, it's going to be slightly different from what you're used to, but that's because I've been away from home. Now, I just wanted to cover a few things for what happened last week. As we know, the stock market was quite volatile due to, well, so many economic activities. For example, a lot of earnings were reported from big companies that we were expecting so much from, like Tesla, of course. And another one was the Fed's information that was released on Thursday by Jerome Powell. So as we know, there is still a chance for a rate hike, even though there may be a pause in the next meeting in November, but that is not certain just yet, considering inflation is still quite high. Now, one of the headlines, which I have my phone right with me here, one of the headlines for last week was Wall Street's worst week in a month closes out with more losses. The Dow fell about 0.9%, Nasdaq Composite tumbled about 1.5%, and the S&P 500 fell about 1.3%. Now, this is not something to be alarmed by because generally the stock market in October is often volatile. Based on history going back to about 1950, traditionally, October has been the most volatile month for stocks. And this is often expected because most companies do report a lot of earnings in the month of October. And of course, these companies are generally the companies that a lot of people look forward to their earnings report. And this sometimes contributes to the volatility that we experience. Now, one of the things that we need to keep in mind is that going into the coming week, we'll still have some reports or economic activity reports that will be released. And I want to talk about one of them, which is the core personal consumption expenditures. All right. This report published by the U.S. Bureau of Economic Analysis reflects the average amount of money consumers spend monthly, excluding seasonally volatile products such as food and energy. FOMC policymakers use the annual core PCE price index as their primary gauge of inflation. Stronger than expected reading could portend a possible hawkish shift in Fed forward guidance. Now, this is important. Knowing that the Feds are going to meet in November, 1st of November to be specific, this report, which is the core personal consumption expenditures, will likely be an important factor to consider by the Feds in order to determine what they will do in the next meeting. Now, the goal is that we remain calm because we do not want to put ourselves in a situation where we end up maybe panic because of what is going on in the stock market. Always remember, this is not financial advice. This is just a recommendation. You have to do your own due diligence to make sure you put your money into what you believe in long term, considering your risk tolerance and your goals. Now, one important thing to keep in mind is when it comes to preserving your cash, one of the recommendations I always give on my channel to people is to use savings, like for example, CDs or high interest savings accounts. Currently, a few CDs out there are being offered at a rate of about 5.5% APY, which is pretty good. An example is actually Barclays. Another one is Marcus by Goldman Sachs offers another CD at about 5.2. There are some CDs slightly higher, but generally you may have to either keep your money in the shorter term to maturity type CDs, which you could do that if you want, but the Barclays is one that is pretty good. For up to a year you can expect to earn about 5.5%. so if you have a lot of money sitting on the sidelines that you feel like this money is not necessarily required now but may be required say in a year, then you probably want to use the CD. High interest savings accounts, on the other hand, could be beneficial for cash that you may need anytime, but at least you don't want to put it in a bank account that is only earning about 0.01% on your APY. So consider this as a way to maybe at least the money that you need to keep your mind at peace should be in something of this sort of investment, all right? So that you are not in a position where you're worried about what's happening in the stock market. It's always important to keep your mind calm and know that the stock market over time generally works well in the favor of people with the rational mindset, people that have the long-term goals. Some people do the options. Some people do this day trading type where you have to, try to time the market to get in and get out. That's really up to you. You have to consider what works best for you. But I hope that you have found value in this one. I just wanted to share this with you, short and straight to the point. If you have found value in it, please don't forget to drop a like, don't forget to subscribe to the channel. Of course, I'd love to see you in the next one. And don't forget to leave your comments in the comment section below. Have a great day, and hopefully we can go through this market or this week without this crazy volatility that we just experienced.